Saphyre is a FinTech company that allows for direct collaboration between asset managers, brokers, custodians, third-party administrators, and their clients. And with me is the CEO, Gabino Roche, to explain Saphyre and what you're doing. So I know you're kind of working in the back office with a lot of these financial institutions. Explain what Saphyre does exactly.
Yeah, thanks for having me, Jane. Well, Saphyre in the industry right now is known as an onboarding tool for new accounts. But given my background of over 20 years in the industry, you'll hear a lot of institutional firms talk about standards. And today, everyone's doing, for the most part, whether you know it or not, email, faxes, and spreadsheets in these big institutions to kind of manage all this referential client data. The cloud today enables this operating system that Saphyre has established between multiple parties. In reality, the industry has siloed their solution between pre-trade trading and post-trade. Saphyre is showing you if you do things correct in the pre-trade, we solve things in post-trade.
Okay.
That's the whole concept.
Interesting. And interesting that you're talking about how these financial institutions still were kind of doing things old school. I mean, these are some of the biggest companies in the world. But you're helping kind of streamline that for them. What are the benefits for the banks in terms of this more efficiency, cost savings? How does it work?
Well, it's two parts. The good news with this is we help firms win new revenue faster. One of the biggest pain points is some of these investment management clients or asset owners don't want to switch providers because it's just too painful. But if you create memory on the data and documents, you can seamlessly port it over. So there's a revenue component. The second is the SEC, North America is moving to T+1, right? Within 24 hours to settle trades. And everyone doesn't think about the fact that today you got T+2, and in reality, most of these firms haven't adopted innovative solutions they're just going to crunch manual processes into a 24-hour period. So by creating this memory process in pre-trade, we're showing firms you can get up to 70% efficiencies in post-trade. You can actually truly settle things in T+1, if not T0.
So explain this, T+1, T0, what does that mean exactly?
So for folks who may not be familiar, it's the trade plus 1 day to settle your trades and to move securities over. And in the industry right now, we're working in T+2. You have 48 hours from the date of the trade to settle. But the Americas and Canada and the US are moving to T+1. Europe is surely going to follow on the back of that. And since the US is a global market pretty much, it's going to set the standard for the industry. So all these firms now have to take these processes that they were used to doing for the last couple of years in 48 hours to 24 hours.
Interesting. How does this benefit customers who do financial transactions in banking?
Well, a lot of the stuff we're doing right now is at the institutional level. So if you make investments in a large asset manager and an ETF or a fund, it's invisible to you, but you're paying in terms of the fees and costs and delays and even the prices and the settlements. So the end user, a customer like you and I, would actually see this in improved fees and execution and returns. But at the institutional level, it's far greater than that. They're spending a ton of money in trying to get this stuff to settle on time, and there's penalties with regulators if you don't do it on time, if you don't move securities on time.
Interesting. Now, you mentioned you had a couple of decades experience. Is that in finance, tech, a combination of the two? How did you come up with this concept?
I will say I worked at the New York Stock Exchange building fixed engines at one point. I saw those standards not being mapped. I worked at JP Morgan, their custody fund service operations, their capital markets business. And then I worked at a consortium called Clariant, where I saw multiple banks try to create a KYC, know your customer utility. And I saw data not being standardized across. And I think the way we actually are solving this is we're using brand new revenue, onboarding of new accounts, to motivate banks to adopt our solution. And since it's a brand new account, you're starting from scratch, we teach our automated intelligence how every firm sees their data. And then it remembers it. It becomes a repeatable process, so you can take your legacy accounts and put them on. So that's how we came up with it.
So talk to me about the future. You've already got some huge clients. Tell me about that, and then what you see is the next few years for Saphyre.
I think the focus now is actually to validate this post-trade proposition. Saphyre, for the last 6 years, has been playing in the pre-trade space, account onboardings, account maintenance with custodians, broker-dealers, asset managers. But now we're actually bridging the gap and showing how we can actually provide this efficiency, because the target date for T+1 in the US is May 2024, a year from now. And so these institutions have to look at how they're going to adopt tools quickly to get there. Otherwise, we don't know what's going to happen, right? I mean, maybe they'll delay it. Maybe there'll be penalties initially to get the banks to move. So I think the next thing for Saphyre is validating this. And we're already doing several pilots with several of the banks as we speak. And I think we'll have some news on that front later this year, hopefully to share here.
Well, maybe you'll come and share with us. Thank you so much, Gabino,
sure.
for coming in and explaining Saphyre.
Thanks, Jane.